So how would it sound if you were to put pre-tax money away in an account, and when those funds were needed to pay for certain medical expenses, you can take out those funds completely tax-free. Oh, and the funds were invested, and any earnings that came out are also tax-free if you use for qualified medical expenses. So it sounds like a really great way to lower our annual overall tax bill, as well as lower our overall medical expenses. Today I want to talk about health savings accounts, or HSAs, and flexible spending accounts, or FSAs, and let's get started. Hopefully this helps. So let's actually begin by discussing HSAs, or health savings accounts. And HSAs are a type of tax-advantaged savings account where you put pre-tax dollars that go into the account, you can earn interest, and they can be withdrawn tax-free for qualified medical expenses. And we're going to put a list of those, of some of the qualified medical expenses, because really the list is quite extensive. So we're going to put that on the screen. But before I move on, I also want to make it known that it's worth noting that insurance premiums themselves are not qualified medical expenses. So who's eligible to open up an HSA? So to open up a HSA, or health savings account, and to contribute it, you need to be enrolled in a high deductible health care plan. And the deductible limits to qualify for 2023 are $1,500, $1,500 for self-coverage only, and $3,000 for family medical. So if your family has a deductible of $3,000, you can contribute. So in addition, your out-of-pocket expenses would need to be at or below $7,500 for self-only coverage and $15,000 for your family. So for example, our friends who are enrolled in Medicare, they would not be eligible to make HSA contributions. However, it's worth noting that Medicare premiums do count as an allowable expense. And then finally, you can't be claimed as a dependent on someone else's tax return. So let's go to contribution limits. How much can we contribute to an HSA on an annual basis? So that number in 2023 is $3,850 for self-only coverage, and making that $7,750 for family coverage. It's also worth noting that if you're 55 and older, you can contribute an additional $1,000, and that acts very similar to the catch-up provisions for an IRA, for retirement accounts. And depending on the institution, the allowable investments are stocks, bonds, ETFs, mutual funds, very similar to IRAs. And where you can go to open those, some insurance providers do offer HSAs as well. There are also other financial institutions and banks that can get you in touch with providers to open up a health savings account. So next up is the flexible spending plan, and they are similar to HSAs. They act a little bit different. And FSAs are a special type of savings account that allows employees and employers to contribute a certain amount of their earnings and their salary to the account, which could then be used for qualified medical expenses. And again, this list is quite extensive. The contributions are not taxed when contributed, nor are they taxed when they're withdrawn for those qualified expenses. And since they're taken out of your paycheck before you actually receive those funds, it lowers your taxable income for that year, for that tax year. And like I mentioned, employers can also choose to contribute the account for their employees, which is a great gift that they can give as well. So let's talk a little bit about the allowable expenses, and then I'll go into how much you can contribute and finish that up. The allowable expenses, they include insurance co-payments, deductibles, qualified prescription drugs, insulin, medical devices. And again, this list is very long. Check with your provider or your employer, and they'll give you a full list, but it is quite extensive. It also includes things such as contacts, chiropractic visits. So it's always worth noting and checking, will this qualify? And so let's look it up and make sure you can collect those savings. And I'll get into why in a little bit. The contribution limits are $3,050 per employee. And the major consideration when it comes to flexible spending accounts is it's typically a use it or lose it type of account, meaning if an employee doesn't use those funds by year end or within a grace period, some plans have a couple month grace period, you lose those monies. So that's why I was going back to make sure that you use those funds for any of those qualified expenses. Check the list of those expenses. For example, we have a newborn, and a lot of the products and devices and things like that that a newborn needs are included in that list. So we're able to exhaust those funds before they expire. So a question that I get quite often is, can I have an HSA and an FSA at the same time? And the answer is yes. You can contribute to a health savings account and a flexible spending account, provided that your FSA is HSA compatible, which means it's a limited purpose FSA, and that can only be used for certain medical expenses, vision, dental, and things like that. So it's always worth checking with your employer, with your HR department and the plan to see if it is HSA compatible to do that. So in conclusion, as you can see, HSAs and FSAs are great, offer great benefits. When we're doing tax planning, we're trying to minimize a person's tax liability, not only in this year, but in the future years. It's a wonderful way to do that, especially in retirement planning, as the HSAs can also pay for Medicare premiums. So check with your insurance provider, employer, look for a certified financial planner that can help you with that. It has these two items can have a great place within an overall family's tax planning for their future. I hope this helped. As always, be good to yourself, be good to others, like, subscribe, and we'll see you in the next video.